Hi. Soaring prices, you know all the stories. There have been retrenchments, there's all sorts of problems around in the South African economy. We thought we would do a health check, a consumer health check. Joining me in the studio for this show is Geoff Miller. He's the president of TransUnion Africa. Geoff, nice to have you in the studio with us. Just to put it in context, put you in context, I beg your pardon. What did TransUnion Africa do?
So TransUnion, specifically in South Africa, we get data from over 1,200 financial institutions, telecommunications companies, insurers around the consumers that they do business with.
Yeah.
And we aggregate all of that information and really get a general sense of overall consumer credit health. Obviously, our banks and financial institutions use our data to help underwrite consumers and extend additional credit.
So you are extracting information from them,
yes,
assimilating it all, selling it back to them so that they can make decisions based on fact as opposed to gut feel.
Informed lending decisions is what we would say.
Right, where are we? How are we looking?
So this is we publish an index that basically measures consumer credit health.
Yeah.
Anything above 50 means consumer credit health is improving. Below 50 means it's declining or deteriorating. This is the fourth straight quarter of deterioration. We're at 43.6. So I would say we're in certainly a period of stress. And I don't think it's any surprise given what's happened in the economy over the last year.
When last did we have 4 quarters that were going down?
It was in the 2008. It was really kind of in that financial crisis period. We're still above kind of that trough that we saw earlier, but we're not too far away from it. We're certainly in a period where consumers are under stress.
That to me, though, is a scary statistic in itself, because that trough hit us as a result of extraneous effects, which didn't really affect us, I think, because of the regulatory controls we had in place.
Yep.
From a banking point of view. I think it was us and Canada who were the two that remained strong.
Correct.
But if we're approaching that now, then that means that's because of internal reasons as opposed to external pressures.
So I think it's a balance of both. I mean, obviously, South Africa is very dependent upon the Eurozone for trade, and that in trade means jobs and all those other things. So I think there are other economic factors that aren't creating job creation and some of those other things. But clearly, the economic situation in South Africa, while we're still growing, is not growing at a pace that matches the potential that South Africa needs to make sure that employment rises, consumers and people get the education that they need, and the country grows.
I know this is not your area of expertise, but I just want to get your opinion on it. How do we get to that stage where we are creating the jobs and everything that we need?
Yep. Not my area of expertise, but I mean, I think in general, right, so there's going to be macroeconomic factors. So I think as the U.S. continues to improve, I think as the Eurozone continues to improve, that by default and definition is going to help additional exports and those types of things. I think really, in my view, education and training are some of the key things that I think the country needs to do to get enough consumers at a skill level that they're employable in a more sophisticated position. And that's really what's going to uplift the middle class and hopefully bring the GDP growth to a healthy level.
Okay, let's get back to your area of expertise then. But thank you very much for the opinion. In any case, where do we sit from? Everyone talks about the amount of people who are defaulting and all the rest of it. Where are we sitting there, honestly?
So what we've seen and what our index has shown is that the number of consumers that are under stress and that are defaulting is rising. And if we look at the number of accounts in arrears, which is one of the factors that go in our index, it's up over 10% year over year. So what we're saying is there's more consumers that are unable to sustain the debt burden that they currently have.
How do you define an account that is in arrears?
So that would mean that it hasn't been paid in 90 plus days. So about 3 months late.
And all the time that interest is just rising on that account?
Yep.
What sort of percentage are we looking at here, Geoff?
I mean, overall, we don't look at number of consumers, but I mean, the NCR publishes statistics. In fact, they just released some yesterday. So there's about 9.53 million consumers out of 20 million credit active that have some form of impairment on their record as it stands today.
So it's almost 50% of the credit active consumers who have an impairment.
Yes. Now that impairment doesn't necessarily mean they're currently impaired. It could have been they're historically impaired.
Okay.
But it is a significant percentage of all consumers, absolutely.
Geez, there's a new term that I've never heard of. I've heard of historically disadvantaged, but now we get historically impaired as well.
Yeah, well, so it's consumers that had some struggles in the past, but maybe have made amends to it. We hold our data on record. It depends on which data you're talking about, for anywhere from 24 months to 5 years. So it does go back a period of time.
Okay, now there are two parties here to any sort of impairment.
Mm-hmm.
One has got to be the consumer.
Yep.
And I come back to the story I've told, I don't know how many times on this show, that when I was growing up, I was taught that if you want that, you save up until you got enough money and you walk into the shop, you put your money on the table and you take that with you.
Yep.
These days, it's I want that and I want it now. So there's my card, take the money. The consumer is one part of the problem, but the person who's selling that is also becoming part of the problem at the same time. Where do we try and start balancing this?
Yeah, I mean, I think the NCA, which was enacted in 2007, the National Credit Act, tried to create kind of rules and standards around affordability that financial institutions, retailers need to assess when looking at a consumer. I think those were left a little bit vague, and in fact, the NCR is now looking at updating those to be very prescriptive in terms of how a financial institution should assess a consumer, not necessarily from a creditworthiness perspective, but assessing, do they actually have the funds and the capital to repay that debt? So I think that's going to go a long way. I think the other thing is consumer understanding of the cost of credit is very low. So we've done consumer focus groups, and when we ask the consumer the cost of what interest they're paying on a particular loan, normally not a single one actually knows. They know how much they're paying on a monthly basis, but they're really not aware of the cost of credit. So I think, I think consumer education around credit is critical, and that's not just a financial institution responsibility. I think the government also takes some of that.
I was going to say, it's all very well to say we need to start educating the consumer, but how do you do that?
Yeah. So TransUnion, we try to educate consumers from understanding what's on their credit report so they can make sure it's valid, it's accurate, and then they can start to get a sense for what types of loans they have out there. So we try to encourage consumers to come to get a free report, which they're entitled to every single year. I think...
hang on, before you go
Sure.
any further there, that's something I didn't know.
Yes.
Tell me a bit more about that.
So under the NCA, us as a credit bureau are required to provide, if a consumer approaches us, a free report to them at least one time a year. So they can come onto our website, www.mytransunion.co.za. They can call 0861-482-482, and they can get a free copy of their credit report. We offer a score, which basically synthesizes their credit report and gives them a view for how they rank versus the rest of the population. And we offer the opportunity for them to monitor their credit report. So I think that's one step in consumer education.
So I want to delve a bit more
Sure.
into this. So I get hold of you, and we'll put those details up on the screen for you, so you can jot them down and get hold of TransUnion if you need to. What do I need to provide you with so that you can come back to me?
So the process is laid out. You see it on the web, or our staff will walk you through it. But basically, you have to verify your identity. Obviously, the information we're providing is extremely sensitive.
Yeah, it would
very
be.
Personal to you.
Yeah.
So we need to look at your ID book. We need to look at it. And it doesn't have to be in person, but we need some copies of those types of things. But it's a fairly automated process. You can upload some of those documents, and then we'll provide that electronically. We can mail it to you. So there's a number of ways you can interact with us.
And then you come back to me and say, this is
what we have on record.
Yeah.
You review that. If you dispute or you disagree with some of those, you can come back to TransUnion, and it's our responsibility to go back to the lenders who provided us that information to validate or verify that information, and then come back to you with the result of that investigation.
So I would need to give you details of all of my accounts, for example?
No, really, it's just ID based. So you need to prove
Okay.
who you are from your ID number,
Right.
and then we ask for some other things just to verify you are who you say you are.
Yeah.
But we don't need to know that we already, everything's linked to your ID number. So it's fairly simple for us to pull.
So you can then go into a bank
Correct, a database that we have that has all that.
database and access Edgar's and all
Correct.
the rest of that sort of stuff.
Correct.
That's fascinating. I never even knew that existed.
Not many consumers do. So last year, and once again, the NCR publishes these stats, about 570,000 consumers came to get their free copy of their credit report. That's not just to TransUnion, that's to the other bureaus. But out of the 20 million, that's 2.5%. So there's very few consumers that are actually aware that this is available.
And you then rank me and say, this is where you rank.
So we give you a
basis.
score, the higher the score, the better.
Yeah.
It's not the exact score that a lender uses to underwrite you, but it gives you a general sense, where you fall. Are you good?
High
Are you
risk.
great? Are you,
Yeah.
So it gives you an understanding and gives you, it kind of benchmarks you and then gives you the ability to track your progress, as you try and manage your finances a little bit more carefully. And then you can use the score as a way to say, have I improved from last quarter, last 6 months, last year? So it gives you a sense on how you're tracking your progress.
But as you say, out of your focus groups, very few of the consumers realized what their credit,
Correct.
the amount of they were paying, what the
Absolutely.
credit cost was.
Credit cost, absolutely. And then the other thing that we think is important is the instances of identity theft are rising dramatically in South Africa. So there's people that are copying ID books, going out under your name, applying for a loan, gaining the cash, and then leaving you with that debt. And you want to understand what's on your credit report, because if you're a victim of that, that could actually tarnish your reputation and your ability to get a loan in the future.